Welcome to the Independence by Design podcast, where we discuss what it means to be a business owner and ways to get unstuck from the day-to-day so we can design a business that gives us a life of independence. How does the government printing money impact your life, your valuation, and the decisions that you should be making? That is exactly why I've got Lawrence Lepard, who is the author of The Big Print, on the podcast today. So pumped. I got to meet him at the Bitcoin conference. He's got a phrase that says, fix the money, fix the world. And I wholeheartedly agree. In today's episode, you're going to hear me and him talk about how Bitcoin and sound money and the paradigm shift that we're in the middle of right now is going to change the base layer of all investment asset pricing, valuations, and it should really be a part of your decision-making framework as you're looking to reinvest back into the company or diversify outside the business, and how does that impact your long-term goals. Lawrence is a absolute hoot. I love our conversation, and I hope you do too. Thanks everybody for tuning in, and I hope you enjoy the conversation with Lawrence. Lawrence, I have to say I am beyond grateful for your time. I know your time. I mean, seriously, man, like I can't even remember which podcast I watched of yours. And I was like, I fucking love Lawrence. And it was just your absolute mission to help people comes out in your authenticity and your desire. And so I'm very grateful. And you wrote the book, The Big Print. And I'm going to take some assumptions here, Lawrence, that like we want people to go in and pick it up. You wrote it for an entry point because the Lynn Alden's Broken Money and all the other stuff that's out there becomes a little bit more complicated. And I think you did a pretty good job at the bridge. Right. So thank you so much.
That was the goal. I mean, I borrowed heavily from them. I didn't write this book. I assembled a lot of other people's great thoughts in a way that the average person could understand. And it's the average person that's going to get hurt by what's coming. You know that. So
I know. And so I'll be honest, I got a whole page of notes from reading the book and from listening to it again. But I thought a lot about how do I want to start this, because I also could talk for 5 days about this shit. And I'm going, okay, to make sure that we have a good journey for the listeners. But also I was thinking about some of the stories that impacted me a lot that really resonated with me in your book was the fair game of capitalism is not here. And you had like serious stories about like your grandfather, your father, and like the multiple times you got hosed with big bets. And then all of a sudden the game has changed.
Yeah.
And like, kind of just walk me through, like, cause I've had the same experience, Lawrence, where I'm like, this is not fair.
Oh yeah.
And so like, walk me through that.
It's a broad thing throughout the country. I think most people in our society feel it. I mean, you know, the game board is tilted or the deck is stacked, whatever metaphor you want to use. I mean, you know, look, the founding documents of the United States are a beautiful thing. I mean, not that we would all have equal outcomes, because more talented people should do better than less talented people, but that the game would be fair. That was the notion of the Declaration of Independence and the Constitution. They tried to make the game fair. And sadly, like so many things, so many great ideas, over time, they lose their luster and they get watered down. And particularly in the monetary sphere, which is really what the book addresses, it's just gotten progressively worse. And to the point now where it's just unrecognizable. I mean, the founding fathers saw it today, they'd be, what the hell is this? You know, to what their idea of a government should be. And so, you know, we slowly but surely, wandered into, printing money and fractional reserve banking and the Federal Reserve. And then the real big one was 71 when we abandoned the gold standard. And all of these things at a macro, at a big level, a big picture level, to keep it simple, have benefited the people on the inside who know how to play the game, wealthy people, bankers, etc., and have benefited the government and have cost the average man or woman money and lifestyle. I mean,
which is time.
And time. And time is the only thing we all have, right? You exchange your time for a wage, and that wage is what
you need to preserve that wage into something.
Yeah. And if they're stealing it, if everything you earn, becomes less valuable every year, and that's truly what happens, they are stealing from you in a subtle way. And it's worse than that, because they're not only stealing from you, the government is stealing from you in order to fund programs that keep them in office, and foreign wars and boondoggles, all kinds of stupid shit. We know that. But that, but the wealthy people, the bankers, and the very, what I call the quintillionaires, right? The very smart people who know how to game the system. They're like, yeah, inflation, this shit's good for me. I'll borrow cheap and I'll invest in things that yield a much higher yield, and I'll get rich.
Well, in what's
Right.
what sorry to interrupt, but I think it's
That's all right.
important
No,
because
that's
I'm
that's the basis.
I'm tracking the whole thing you're saying, and because I'm really honestly curious to like how you've emotionally processed this, because I'll give you my example, and because like you told your story about your grandfather, and I mean you had bets placed, before the great financial crisis and all this, and then like the game was changed. So like when I figured this shit out, Lawrence, because I like again, me and the audience, we're entrepreneurs. It's like, okay, here's the game. Go work hard, eat shit, and you will get rewarded for the efforts and the risk. And so when I figured this stuff out of like, they're printing money from nothing. While everybody listening in here, every 2 weeks, I had a $240,000 payroll and I had to hit it. And if there was no money in the checking account, I'm screwed. And like everyone listening in has a constraint of cash flow. And then when I realized like, wait a second, they just print money out of fucking nothing. And then I was like, so I was trying to tell this to my wife, which God bless her soul for them having to like talk to me about all this. It's like, I said, Megan, I feel like I've been playing soccer my whole life. And the other person on the other side of the team picked up the ball, threw it in the net and said, 2 points. You can't use your hands and do that. And it was like this, because like, it's this weird where that it started to bubble up resentment, Lawrence, where like, because like I have no issue with someone being super wealthy. And that's why I love working with my clients, because they earned their wealth versus, so maybe kind of speak to like how that's different from
Yeah,
earning
look,
versus
I mean,
what you're
somebody
talking
who
about.
invents something new and creates something and adds value and gets paid for it. I mean, I'm all about that. And as you know, in today's world, there are a lot of people who want to tear down billionaires. And I don't have any problem with somebody if they're a billionaire if they've earned it honestly, and there are plenty of ones who have. Although what I would say is that many, many billionaires have benefited from this capital system that I've talked about, where they can borrow cheap and we can't. I mean, just let's just do it on an equities basis. I mean, the biggest inequity in the world right now is the difference in the cost of capital for somebody who's got a lot of capital and a big business versus the average person. If you're an average person, you're a working person, and you want to borrow money, there's only one cheap way you can borrow money, and that's against a house. And even that's not as cheap as it used to be. It's 7% or something now.
Well, let alone the ridiculous bullshit you have to go through to get the
Well,
equity that you own, right?
all that. But on top of that, if you really want to borrow money, you're not going to get an unsecured line of credit. Your only unsecured line of credit is your credit card company. And since the usury laws were thrown away, those are now 25% on average, and some of them I've seen them as high as 30%. I mean, the mob would blush. You can't borrow money at 30% and pay it back. I mean, you just never get out. And so, whereas if you are a connected financial player, a hedge fund person, a Wall Street person, a banker, whatever, you can borrow at the federal funds rate or something very, very close to it. And so that gives you an enormous advantage because you can borrow that money and then use it to go somewhere else and place it a bet on something that yields more than that money. And for basically just being a rentier or capitalist, you get wealthier. And the point I'm trying to make is that the cost of borrowing should be equal, for all people within the system, and it's not. And that's
Well, so
that's the fundamental unfairness, right?
I love it. And I think that'll tie into, as you know, and my whole goal is with your quest to getting to the normies, and we're going to orange pill as many people as possible. So we will get to how Bitcoin fits into this, but I think it's going to be interesting as we frame up the why. And it's, this has all been integrated, Lawrence, into my life over the last couple of years where it wasn't. And then all of a sudden I was like, okay, so like my chain of events was, okay, the game is not fair. Like, well, they just print money. Like when Delta got $55 billion in 2020, everybody got free money in 2020. I'm like,
Oh
this
yeah.
is insane. And
Oh,
like I had a fractional CFO business, Lawrence. Everyone's getting money. And I'm like,
it was it was
what the hell?
it was unbelievable. I mean, I know guys who didn't need the money, who took out
Uh-huh.
$10 million in loans. They kept their employees, and a year later, the loan was forgiven, and they had literally just gotten a $10 million check from the federal government. I was like, what?
I
How did
know
that
the
happen?
ERTC, the PPP, PP
Oh,
round
all of it,
two, one.
all of
I
it,
mean,
all of it. It
so
was, yeah. So that's another. We haven't even gotten into that. That's the most recent thing. And what the COVID example did, by the way, is it really primed the pump for universal basic income. I mean, they sent out
mhm.
about $18,000 per household in the United States, but the average household only got, two or three stimmy checks, maybe call it $2,000 or $3,000, right? somebody else got that other slice of the
the
18, and that
the
was the
the
PPP
business
people
owners
who,
listening in. I mean, like the business, anybody with a company got a ridiculous amount. But like, okay, let's like, here's I want to frame this up because I want you to hear how I'm describing this situation to my clients who weren't familiar with Bitcoin. And then by the end of a conversation, like one conversation, we can get into like, what do you get? Like, they're like, what? So here's how I like, and I'm curious, like truly, like, because we can unpack a lot of these parts of the story, I think, because you have a lot of good detail. And then we always want to go pick up Lawrence's book. But so game is unfair. So there's this kind of first, like, the grievance of like denial, then like, okay, wait, it isn't fair. And like everybody dealing with the banking system. I mean, we could go on for like 4 days about how effed up that fiat pyramid scheme is. But okay, if we say the system's wrong, so like I spend a lot of time, Lawrence, teaching these owner operators how to think like a capital allocator, which means we have to think about rates of return and cash. So I got a D in accounting, by the way. So like I actually like was terrible at school, and I landed all this because everybody that owns a company wakes up and they go, where's what's in my checking account? Who owes me what receivables? Where's my inventory? Where's my payables? Well, like I
yeah,
have to pay
am I going to
payroll.
make it? Yeah, hey,
Yeah, am
how
I
do I
going to
get
make
through
it?
this week? Yeah,
And this is $1 million company. To I have people that do 50 to 100 plus
sure.
million. That
No,
it's the
it's
same issue
yep,
because they are in the traditional system, like you said. So even though it's not the Jane or John who is a consumer, they still have to go to their shitty bank to beg for money for a line of credit or conventional loan or an SBA loan. So, anyways, here's where I'm going with this. Where like as I've been walking through to people, like, okay, is it because I explained to them where the multiple comes from? Because private equity, since the last 10 years of the ZERP or 15 years, had like these multiples don't cash flow these companies. So like it's a complete scam. Like the multiple times the normalized EBITDA. And I've been saying, well, it doesn't include working capital, debt, taxes, all this shit. So here's where I'm going. Like, there's not enough cash flow in the system. The owners know that. So then I in my trainings, I actually walk through the discount rate and the buildup. So like, okay, 4.7 treasuries, then we've got 5.6 S&P, and then like we're building up risk. And I said, your company should be generating a 20% rate of return. And I said, oh, by the way, that balance sheet is getting eroded every single. So like the 4.7 is fucking bullshit. Like it's actually 8, which is M2. And they're like, what? And I'm like, that's why you feel poorer every single day, and your employees, your payroll costs. So it's when where I want you to maybe fill in some of this of the M2 of like how we can prove that like this is not Ryan or Lawrence's opinion. If the cost of money is that buildup, and that's where the multiple comes from, like the whole pricing mechanism of corporate finance is wrong if they're printing 8%. So what do you think about that
well,
like
I
that
completely agree
conversation?
with that. I mean, in terms of it, the one thing I've always said, and I say this in the book too, and the reason why a lot of people don't understand this, they shouldn't blame themselves for not understanding. This is a very sophisticated fraud. Do you know what I mean?
Yeah.
And I mean, it is. I mean,
Yeah.
like
Yeah.
the guys who run the system. I mean, they're not stupid, and they've rigged the game in their favor. And they tell us a lot of bromides about, oh, don't worry about it. The Fed's doing the right thing for the people. Blah 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 blah. It's all a lie. Okay, it's a complete lie. Just like the COVID thing was a lie. It's the same. And once you start peeling it back, you see what a lie it is. And um, yeah, I mean, look, the cost of capital, in my opinion, is something that should be set at a market rate, not by the government, which is what the Fed does. The Fed is a price fixing bank cartel. And the cost of capital should be set at the level at which savings and investment needs balance one another. So there are people who need money to borrow for consumption, or if you're a business person, probably to fund your business or grow your business. And then there are people who have savings who are like, okay, I don't want to just let the savings rot in a bank. I want to get a rate of return. And so the two, supply and demand for money, the use of money, should balance out at the business rate. Now, when you're the Fed and you start messing around with that, all kinds of bad things happen because, we saw rates as high as 20% in 1980, which almost bankrupted my father's business. And then we see rates as low as 0%, which is like basically a giveaway to anyone who can borrow. The problem is, that the average guy, you, me, Joe Sixpack, we can't go borrow at 0%. But Wall Street can, banks can, hedge funds can, wealthy people can. And so, I mean, that's just a free giveaway to them. And they all. I mean, let's go back to kind of the quantity theory of money and the money supply and M2. Let's just talk about that for a minute, okay? I mean, so money is a representation of it's a claim on goods and services in an economy. I mean, it's yeah, exactly. Money is wealth, but it's only wealth insofar as, I mean, a dollar bill per se, it might as well be monopoly money. It kind of is anyway. uh, but it's only good insofar as you can walk into a coffee shop and buy a cup of coffee with it or a couple of them. And so it's a representation of a good or a service. And there's only X amount of goods and services in the economy at any given point in time. I mean, you can't like snap your fingers and say, okay, let's double the coffee production in the U.S. It just doesn't happen that way. You got to plant trees, you got to harvest the beans, blah blah blah. So if you have X amount of money out there and you have Y amount of goods and services out there, the two balance and you get a price level. Well, if you're growing the money piece, and that's what the banks do, and that's because they print money out of nothing, ex nihilo, out of nothing, literally. A bank sits there and it says, okay, Ryan, I'm going to put, $1 million in your checking account, and now you owe me $1 million. That money came from nowhere. It did not exist before they created it. It just came from nowhere.
And they don't even have to use paper and machines anymore.
Yeah, it's all on digits, right? And most people don't understand that. So through credit creation, through you taking a loan and them giving you $1 million, if let's say there was 100, let's keep it simple. Let's say, I mean, these are crazy numbers. Let's say there was $10 million in the economy, and let's say you were one of the only participants in the economy. You just went and borrowed $1 million. So now there's $11 million in the economy in terms of money supply. Well, you just grew the money supply 10%. So the cost of everything, over time will go up by 10%. So it's, the money supply, if it grows, is inflation by definition. And so inflation is nothing more than more money supply chasing the same amount of goods.
Well, and what's so fascinating, Lawrence, is like with these owners that I help understand finance. I mean, if you have a balance sheet, like you have a starting balance sheet when you start a company, assets and liabilities, right? And if the denominator is growing, it doesn't work, right? So like if you have someone chipping away, because like your cash flow statement is literally just a difference of the balance sheet over 2 periods of time. So like the ground is literally melting underneath you as you're growing.
That's what you're talking about is the decay in the fiat value, and that's why Michael Saylor changed the model that he was operating under, and he realized that he had $500 million worth of cash sitting on his balance sheet. I'm sure a lot of your group that you talk to and work with are folks who have cash on their balance sheet, and what they're probably unaware of, or maybe they are they're tangentially aware of it, but they're not really focused on it in many cases, I think, is that whatever cash they have is losing value every year. And it's not what the CPI says. I mean, in the book, there's some great statistics that show how they cook the CPI. I mean, the right measure of how much value it's losing is the growth in the underlying M2, because it's really simple. I mean, it's like diluting beer. I mean, so you have one mug of beer, and that'll get you so drunk, and if you add a mug of water to a mug of beer, you still only have one mug of beer, and if you drink all of it, you've now drank 2 mugs, but you still only have one mug of beer. And so the fact of the matter is, the beer is the production of the economy, and the water is the new money that's getting added in and diluting the old money and its value. And so that's just what's going on. It's going on consistently. It's been going on since the beginning of time, but it's gotten particularly worse since the global financial crisis in 2008, when they printed a ton of money, and then even worse still in 2020 when they printed a gargantuan ton of money. And so I wrote the book. I called it The Big Print, and I say, there've actually already been 2 really big prints. One was '08, and one was 2020. And here's the thing. I think a lot of people think, well, okay, these are unusual circumstances, a housing bubble and, a pandemic, and we'll go back to normal and everything will be fine. And that's where I split with the consensus. I'm like, no, you don't understand. This is a feature,
it's
not a bug. Yeah.
Yeah. Well,
we're gonna have a bigger print. It's coming. I mean, there's a book.
And let's unpack that, because I got there's these economists called ITR economics.
Sure, I know them. Yeah.
So Alan Bolio is a friend of mine. His daughter Kim Clark is a really good friend of mine. So this is where I think there's some Venn diagram overlap. So Alan comes on my podcast once a quarter, and has for years. the whole 2030 Great Depression, and like he speaks with Peter Zion every once in a while. So it's all about this demographics and all this stuff. But what's fascinating, so I actually, Alan had me on his podcast to explain to
Nice.
him what Bitcoin is.
Oh, good. Yeah,
And
good.
so here's where this, I think I love how open-minded he is. And Lawrence, I looked at him because, it's all about like the crash and the Great Depression 2030. I said, Alan, like, okay, I'm tracking you on all of the data. Like we have like all these problems. And I said, do you really think, Alan, that the old people in government are going to let all of the old people's stock portfolios drop by 50% and their houses drop by 50%? I said, just ask me that one thing. And he just looked at me and I was like, dude, they're going to print. And then I was like, Larry, I was like, they're going to print. They're not going to let it go down.
Yeah, we know what the policy response has to be. I mean, when faced with a sudden death event and the risk of inflation through printing, they'll take the risk of inflation over sudden death every day. I mean, and they did it in '08, they did it in the pandemic, and they're going to do it again. And so, the book really should have been called The Bigger Print, because that's what's coming.
I think it's
and it's,
well
and it's,
positioned.
it's it's part of the "Nothing Stops This Train" theme that Lynn Alden
Mhm.
has started on. And there's a chapter entitled that in the book. And what it really describes is, in a system where you're basing your GDP growth on debt, and your rate of debt growth exceeds your rate of GDP growth, eventually the gap between the two gets so large that either you would have a collapse, which is what happened in '29, and they were not able to arrest it, and so we had a Great Depression, or it's what happened in '08 and 2020. But in both cases there, they addressed the issue by printing money. And we've now got two times when they did that. We've actually got a lot of other smaller times when they did that as well, but those are the
Mhm.
big ones.
Well,
Because they did it at
what
Silicon Valley Bank, and they did it in September of '23, and there are other examples. But
when SVB got bailed out,
right,
okay, like because it was really interesting for me in the timeline of all this. So like, just to give you like the context, like I have read hundreds of books on this shit. So like for up and because like I had banking problems, Lawrence, with my family business. So like I was always like, well, these people in suits just randomly magically give us money when we need it, and I can't stand not being sovereign. And so like there for 10 years I studied the problem, and I'm like, what is the solution here? And then I stumbled on Bitcoin. It was like your podcast, and then it was like Lynn Alden, and then Safadim, and I'm like, oh my God.
yeah,
And
right. Yeah,
it just was
yeah.
like blowing my
It
mind.
blows
But
your
what,
mind. Yeah, I mean, the first part of my book is actually quite depressing, and I've had several people come up and say, "God, that was really dark." And I'm like, "Well, yeah. I mean, but and there are people in the Bitcoin community who knock me for being quote unquote a doomer, and I'm really not a doomer. I'm very optimistic about the long term, arc of humanity and how things will get better for my kids and grandkids. But I also think it's unrealistic and irresponsible to be in a situation where things are breaking, and they are, in my view. I mean, people are getting roasted with inflation, and to not talk about it, and to not talk about solving it.
you
you
know
know,
what? It reminds me of I've got the allegory of the cave, and this is getting pretty geeky with like
oh yeah,
Socrates. Like
sure.
it's the whole Matrix. Like everyone's arguing. Like I saw all this shit on the CPI, and we can talk about some of the data I want to talk about. I'm going to keep weaving us together with all these topics. It's just gaslighting on a mass scale. And at some
Yeah,
point, going back to your doom, because I'm the same way. I'm like an internal optimist. And then
sure.
everybody's like, God, Ryan, like you're so just, I'm like, okay, everybody, here's the deal. Like you got a freaking stint going on in your heart. Like, should you keep smoking blunts and having a bottle of vodka every night? Probably not.
Yeah,
Like
right.
do I want to party all day long? Fine. But like at some point, your body's going to go, Mayday, Mayday,
Yeah,
Mayday.
that's
And
exactly
like
right.
the whole world is being like, no, Lawrence, just be a good boy and sit in your desk. And it's just like, and the people listening to this are usually outsiders because they're entrepreneurs.
Right.
And so that's why I'm
Entrepreneurs,
watching.
entrepreneurs get it because they have to live in the real world, and they have to deal with reality. The people who generally don't
Cash.
get it
Do you
are
have
government.
cash for payroll, right?
Right, and
Or
they gotta make
inventory.
payroll. Yeah, and if they
Right.
yeah. No, the people who definitely don't get it are academics and the government. I mean, because they don't live in the real world. I mean, they live in their own fake constructed world, and they think their models make sense. And of course, we can all show that they don't. But
Which
yeah,
is
no,
the money printing versus the sound money. Do you want to make like because I think how we could line this up is like the business owners, Lawrence, they're listening, they have to generate more cash flow to make it worth it. Like at the end of the day, is like your time is being stolen if it's not worth it. And when you talk about the Wall Street people, like they've been ingrained in the rates of return forever, where owners, like even of a $50 million business, like revenue, net income, K1, it's like, no, cash flow, like the valuation is what's important. And with that lens, then they start going, well, where should I get the return? And all of a sudden, like this like eye-opening experience happens. Like, where's the return? And it's like, well, is it your business? Is it treasuries? That's F. If 8% is diluted every year, we have to have a 9 to 10% rate of return pre-tax. And then you go, holy shit, where do I get that? And you start to kind of think wildly different.
Yeah, no, that's exactly right. I mean, capital allocation and return on capital is what capitalism is all about. And yeah, and Bitcoin obviously has had the best return on capital of any asset ever since inception. And that's just something that it always kind of shocks me that more financial advisors don't understand that and ask themselves the question: well, if this thing is outperforming everything else, why don't I know anything about it? I mean,
Well, you've probably thought a lot about that. What's your answer to that?
well, I think they're self-interested. They can't make money off it. That's part of it. I think many of them are intellectually lazy. I actually think that whole thing, that construct, is going to get broken apart. Some person is going to go. Some person. I mean, I know people like this. 5 years ago, they went to their financial advisor and said, "Hey, some people told me I should buy some Bitcoin. I think I should do that. What do you think?" And their financial advisor said, "No, that's a stupid idea. Don't do that. It's a fraud. It's blah blah blah," and scared them away. Let's just say it was at $20,000. Okay. And now here we are, X number of years later, and it's at $200,000, or someday it's going to be $1 million, and they're going to realize, holy shit, if I'd done that, I'd be so much better off. I'm going to sue my financial advisor.
I was just say class action lawsuit at
Yeah, I'm
some
going to do
point,
that for bad advice.
yeah.
And there are plenty of attorneys who would take that on, and I mean, because it really, and I mean, maybe they'll have a defense, which is, oh, there's always risk, and you never know the outcomes, but today, I mean, if you've got the best performing financial asset in the history of the world, and so if I think we're going to get to the point where a financial advisor is going to be forced to say to themselves, I cannot ignore this. I mean, I know there's some big pension consultants in Boston where I live, and when Bitcoin first came on the scene, they all shat on it. But the museums and endowments, college endowments, and pension funds that came to them kept asking about it and asking about it. And suddenly they did the work, and they kind of realized, this thing's probably going to make it, and I don't want to get sued for saying.
I love on X. It was the Harvard saying it's crap,
Right.
and then all of a sudden they buy
some.
120
Yeah,
million.
exactly. And my point is that they started saying they changed their tune. Well, it's highly risky, but if you want to do a little bit, that's fine.
Larry Fink, and I mean all of them, right? It's
and so eventually everybody has to bend the knee, because it really is the best financial asset out there right now, and it's going to be for many, many years. And so whether people want to
what was your story, Lawrence? Like where did you, because of all of the like,
well, in terms of my Bitcoin story, or how?
Yeah, like what was your inception point? Was there like, because I know you started going into hard assets after the financial crisis, right?
So I was, I mean, even before the GFC, I was a hard asset kind of guy.
Can you explain why to the audience? Because it sounds
Sure.
this kind of ties us into the sound money.
I mean, probably because my grandfather was a gold bug, but I think my family. I mean, there's a lot of inflation in the '70s. I grew up in the '70s. I saw all that, and I saw how well gold did in that time frame, and I always kind of intrinsically knew that the financial system was built on this paper money that they can print, as you say, and that's not a good foundation for money. I mean, money to have value needs to be scarce, and gold is scarce, and Bitcoin is scarce, but printed paper money from the government, that's not scarce. They've abused the privilege. They've printed too much of it too many times, and so I always kind of knew that, but I really wasn't focused on that. That wasn't the core of what I was doing. I spent the first 2/3 of my career investing in technology, because I thought technology was going to change the world, and I was right. And I got in on PCs and disk drives and software and all the stuff that grew in the '80s and '90s. Did really well with it. I got in the internet in '93 or '94. Did really well with that, and so by the time I kind of got to the GFC, I'd made some money, and I was kind of semi-retired managing my own money. And then the GFC just woke me up. It's like, holy shit. Yeah, I've got X amount of money, but that's not going to, I'm only X 50 some odd years old. I might live another 40 years. And this might not be enough if this inflation gets bad enough. And so at that point, I seriously pivoted to not just I own a few gold and silver coins to I'm going to become an investor in sound money. And I made a fund, I created a fund that invests in gold and silver mining companies. I bought gold and silver stocks. And I was a gold bug. And the reason is just, it was really simple. There's nothing hard about this at all. It was just the government can't print gold and the government can print money and the government's going to print a lot of money. And they always have, they always will. I mean, it waxes and wanes. There are times when they print more and times when they print less, but the trend is they're going to keep printing more. And as we've seen, it's gotten, the Fed balance sheet. I mean, pre the GFC, the Fed balance sheet was, $800 billion. I mean, now it's, just over, well, it's just come under 7 trillion, but its peak, it was 9 trillion. So that's over 10, it was at one point over 10x where it was not that long ago, 15 years ago. So, the problem is accelerating. So I kind of moved over into sound money. And then when Bitcoin came along, I heard about it early on because I was involved with the Ron Paul movement and a lot of libertarians at PorcFest and others were buying it. And I've got some great stories about people who were buying it $1, $2 a share. I mean, very, very
That's crazy.
modest means people who ended up with a lot of Bitcoin.
That's so cool. One of my
story.
favorite clips, Lawrence, one of my favorite clips of you on Twitter is like, you're like, there will be a time when all of the, like, and I can't remember, it's like 2.5 minutes of like you explaining like who will have all the money and how everything inverts. And like we'll say to our children, you had let 12 people price money. That's insane.
Yeah,
and like all of the people.
Yeah, what were we thinking? Yeah, right. And so I kind of saw Bitcoin, but so I made a mental error, which was, because I've been following these things for internet-based money, alternative currencies, etc. Had always been something that was of interest to me. There were other experiments called, eCash and Hashcash and eGold. And I mean, people tried to do this. I mean, the notion of having money on the internet that couldn't be tampered with was a good idea. And a lot of people tried to do it, but they failed. They didn't have all the technical pieces. They didn't have the cryptography. They didn't have the mining, the proof of, the difficulty adjustment, the proof of work, all the stuff, all the things that make Bitcoin so unique weren't in place yet. And so they failed. So when Bitcoin came along, I thought, well, shit, here's just another one. You know what I mean? It's just like these other 5, it's going to fail too. So I ignored it.
What year was that?
What's that? Yeah, I really regret that.
What year was that?
Oh, that was like 9, 10, 11. And I was on Max Kaiser's show. And Max was originally a gold and silver bug, as was I. And he's like, hey, man, you got to get some of this. And I was like, no, Max, I don't believe. It's not going to work. Right? Yeah, oh, yeah. No, I fucked up. But then it went to like 100. And I was like, oh, hang on a second. This isn't $2 anymore. This is, some real money. And then it went over that. And I was like, all right. And I dug into it more. And I realized I was probably wrong, that it actually was working. And there was a chance it might continue to work. And so I started buying it. And, when I almost got into the Mt. Gox thing, fortunately, actually, it would have worked out okay because the Mt. Gox guys made money, but it took them 12 years to see it. But I almost got into Mt. Gox. I was about to send them some money, and then Coinbase came along, went public, and I bought through Coinbase at like $300. And so I just kept adding to it. But even then, I think I've told the story. I went to an MIT Bitcoin forum, sitting next to a core developer. The guy's got a PhD in computer science. I mean, he knows 100 times more than the shit that I know. And I asked him, I said, hey, man, is this thing secure? I mean, is this really going to work? I mean, there have been other experiments that have failed. I own a bunch of these, but not, a huge number. And I could maybe put more money in, but I'm not sure I want to, And he said, to be honest with you, Larry, it's an experiment, and we don't really know for sure. And yeah, there are times when we make some changes on the code, and I go home at night, and I would think to myself, oh, fuck, I blew the whole thing up. And I'm like, here's a core developer, MIT PhD computer sci guy who says, well, it's still got and it did at the time, They found backdoors that they had to plug, and as you had the the block wars, and you had the hard forks, and I mean there were a lot of things, there were a lot of kinks to be ironed out between 2013 and today, and those things got ironed out, and as they did, I got more and more confident. I bought more and more of it, but so and then of course as I just kept studying it more and more, then Safe came out with his book, and that was a big, that was 2018, that was a huge.
I've sent that book to a lot of people along with your book. Yeah, it's like your book, Safe's book, and Lynn's book are different for different audiences, and I try to tell everybody to read all of them.
Right. I've given Safe's book to 1 million people. I've given Lynn's book to a bunch of people. Problem is, first of all, people don't read books in general. I mean, Americans just don't read books.
It's crazy. I know.
It's crazy, right? I mean, how do you get smarter if you don't read books? But second of all, not all Americans read books, but second of all, they read books that are they can understand and that have stories in them that have some human interest. And so I try to put human interest into my book, and I try to make it easy to understand because I really wanted it. I didn't want it to go over because I've given Safe's book to people, and I know they don't read it. They get into it. He gets into the classical economic theory, and they bog down. And so,
Well, and that's where like I love it, and I want to continue to unpack sound money, and like here's where, if I kind of lay out to you like how I got here, and because I think a
yeah,
lot of my
do it.
clients like, dude, I just want to be free. It's just that simple, Lawrence. And like, I want to be free. And like, my dad barely graduated high school, and he told me, you work really freaking hard. He was a sales guy. He sold copiers. So our family business was copiers. Sell 400 phone calls, 15 appointments, 7 net news, 5 proposals, 50 grand. You make a shitload of money. Just show up, do the numbers, man. And like, and I hate people telling me what to do. And I got a wife and 2 daughters, and like, they can kind of do that. And like, then it's like, you have
That's
to
okay. That's
cohabitate.
great. They're allowed.
Yeah.
They
They're
get an
allowed, right?
exemption.
Yeah, that is. And so I say this because a lot of, that's why I resonate with all my clients and my audience. It's like, but I'm willing to take personal responsibility for my choices. And when I realized that the game was rigged with our bank, like, I have a whole banking story, and that's why I was so fascinated with your stories that you shared. And so I, through deductive reasoning, landed on Bitcoin. Of like, I want to be free. I'm sick and tired of the world stealing my time because I earn a bunch, it disappears. I earn a bunch, it disappears. And I'm like, wait, it's so like, Lawrence, because I'm turning 39 in a couple months. So like, I am the like second year millennials or whatever. And like, like, here's my emotional feeling most of my life is, I've never surfed, but like, I watch people that sit out on waiting for a wave, and then you miss it and they're like, oh, and you're just like paddling.
Yeah,
And I
yeah.
feel like my whole life I've been
You
paddling
paddle and
behind
try
the
to find
fucking
the wave.
wave.
Yeah.
And I'm going like, this is not fair. I work really hard. And then I look at all my clients and I'm just going like, something's rigged. So then I got here. So then like how I, to kind of go expedite to, I think you could do some really good favor to us on explaining to how the Bitcoin technology works. Cause I tried to do that with Alan, and like, it's like, okay, well, does it work? Well, I'm like, okay, wait a second. You can't print money out of nothing. This is insane. And then I read U.S. History of Money and Banking by Rothbard, and then all the other shit. I'm like, this is the biggest freaking joke ever. Like, the
Oh
whole
yeah,
thing's corrupt to the
absolutely,
core. For hundreds of years, the
absolutely.
whole
Yeah.
blue versus red has been a
I mean,
fight over
I
money
think
printing.
you got here because, and I think, see, I think there are a lot of people in this country that fundamentally know that something is wrong and that something is broken, and that they're suffering as a result of it. Their healthcare costs, their food costs, whatever it might be, and they're just like, hang on a second. Back in the 50s, one person could support a family, et cetera. And now everybody's struggling to get by. I mean, it doesn't matter how well you're doing. You notice it. I notice it. I'm doing fine, and I notice it. Things are goddamn expensive and getting worse. And so once you realize that, then you start to kind of question why. Why is this so? It wasn't always this way. What's changed? How did we get from where it was better when I was young? I mean, part of the reason I wrote the book was I remember how great America was in the 70s. It wasn't perfect. We had a lot of racial strife, and we had the Vietnam War going on. But in general, in terms of a nation, it was a kinder, gentler, more middle class oriented, everybody kind of got by sort of nation in the 70s, where now it's really much more of a dog eat dog. There's the rich and there's everybody else. And
Because the pie is shrinking. And like,
yeah, exactly. And when the pie is shrinking, people aren't happy. And what you can see, I mean, I think you probably saw it with your dad. I know I saw it with my parents. Is, you know, they got you on this hamster, treadmill, and you can't ever get off because you don't. They can always turn up the speed. And so I saw my father retire with some money, and by the time he passed, it wasn't much money left. I mean, it was because the cost of everything had gone up a lot. And so, and that's not what should be happening. I mean, if you earn money, if you spend your life's energy to earn money, that should hold its value. And the reason it's not is because the government and the banks are stealing it from you in the corrupt system that they've created.
I
And
know,
so
it's insane.
all of
It's,
those things are very painful, and we all feel them. And that would be depressing if that was the end of the story. Fortunately, it's not the end of the story. We've got this really great technology, and we've got two forms of sound money, gold and Bitcoin, and they're both really starting to thrive as against their system. And what I think the end game is that their system is going to fail and our system is going to dominate. And we are going to be on a sound money standard and things are going to be much, much better in the future. I mean, I have enormous optimism for what my kids and grandkids will, the
Me
world
too.
they will live in. It's going to be really great. But, every generation I think is forced or is faced with, what are the challenges of your time? I mean,
The fourth turning, like
yeah,
yeah, yeah.
we're turning. I mean, in the case of the people who grew up in the Depression, I mean, they had to go win World War II, and it was brutal, and they suffered to do it, but they did it. And my life has been pretty easy, and a lot of boomers' lives have been pretty easy. And boomers are a pretty spoiled generation, in general. But we're about to get our comeuppance because they may have all this wealth. I mean, it's interesting. I always say, they can't cut Social Security because it's politically untouchable, but they're going to effectively cut Social Security because your
They're
Social Security
printing.
check is going to buy half as much shit.
Well, and
So,
that's where so Lawrence, when I think about okay, so there's in Phil Knight's book, Shoe Dog, I love his phrase, like,
oh,
what
it's
do
a
I
great
know?
book. Yeah, I
Isn't
love
it
that.
great? And I
Yeah,
just like,
yeah.
God, he earned every single dollar, man,
Oh,
all the
yeah.
risks that he took. And so, but like his whole phrase, like, what do I know? And so this is where I go, okay. And then I constantly am pulling back. Well, I know that there's 330 million Americans, 80 million boomers, and I've done so much research on the economics. Like, okay, how much money does the average person have? Okay, well, it's mainly in their house. Well, that's fake money too because it's actually getting printed. So you go through you just keep double clicking and you go, that's where the 2030 Great Depression from Allen and ITR comes from. Peter Zion's always talking about his, the demographics. But I go, okay, well, so what do I know? They're going to have to print. Back
Yeah.
to your whole book. They have to do this. They're not
They
going to
have
not
to
do so,
do
which
that,
means
right?
we're going to
And
devalue the money.
that's why the book was really meant as a warning. I mean, I tried, and you and I talked about this pre-show. I mean, you asked the question, has the book been successful? And I think, in terms of the reviews, I mean, it's 4.8 on Amazon. Most people read it, like it. I mean, I've sold almost 40,000, just under 40,000 of them so far. A little over half a year, which they tell me for a self-published book is quite successful. But in my book, actually, it hasn't been successful, and I'll tell you why. I want the goddamn thing to go viral. I mean, there are 330 million people out there that need to hear this lesson, need to understand this problem, and they're gaslit and they don't understand it. They know something's wrong, but they don't get what it is. And I think if they took the time to read this book, they would understand it because the experience I've had, and I've had feedback from a lot of people who've taken it and given it to their friends, is it works. People read it and they understand it. And so, and I mean, the beautiful thing is, Bitcoin is I mean, if you kind of consider the other side to be this monster, this fiat monster that's kind of constructed of banks and government, working in concert to inflate our money and screw the average person. What we've got with Bitcoin is we've got this really sharp spear.
What was that like being aware of all of this and then finding that Bitcoin exists? Like that
yeah,
must have been very fascinating for you.
oh, it was great. I mean, and in fact, I mean, that was one of the things. I mean, it was so funny to me. I tell a story. So I was a gold guy, right? Because I knew the fiat thing was a scam, and gold was your defense against it, right? And Bitcoin came along, and I slowly got orange pilled as I got more and more conviction that the technology was really sound, that this was a true innovation. It wasn't going to blow up. And somewhere in that whole process, one of my good friends who was a Bitcoiner, he'd been a gold guy. He was a very smart guy. He quit. Well, his background doesn't matter, but he had pivoted from 100% gold to 100% Bitcoin, probably in 2017. It's pretty early, so think about that.
Yeah, that's
And
not too
he and
bad.
by the way, he'd gone 100% gold in 2000 when gold was at $300, and it went to 1900. So he got two really important trades right. He took his wealth from 300 to 1900, and then he took it from, when he had pivoted, the 1900 had come off to closer to, 12 or something. But then he took that and put it in Bitcoin. Yeah, it was significant. And he said to me, Larry, I mean, this fiat monster is a big ass monster, and we've been losing with gold because they can manipulate it and everything else. But these Bitcoiners, we got these angry Bitcoiners over here, and they're like, they got torches and pitchforks, and they're storming the castle, and they're gonna go overrun these assholes. And I was kind of like, I just love that metaphor because it really is kind of true. I mean, and I'll tell you the other thing. So your generation is now into it, right? So in the olden days, if you were a gold bug, you'd read von Mises, you'd read, all the Austrian economists, you knew who Rothbard was, you knew who Ron Paul was, et cetera, et cetera. You got it, right? Nobody who was young knew any of that shit, okay? So suddenly, Safe comes along and he writes his seminal book, the Bitcoin Standard, which everybody needs to own and read. And he's a brilliant man, just brilliant. And now I've got 20-year-olds quoting von Mises to me because they read the Bitcoin Standard. So what it did was it opened up the eyes of your generation, of all the generations below mine, to what I knew it was going on because I've been watching it the whole time. I've been seeing it for 40 years. But if you were 20 years old coming out of
I
college,
couldn't imagine. I literally could not. I think about this a lot watching you. Imagine have understood this for 40 years and how long it's taken. Your sheer endurance is so admirable. It's
oh,
like,
thank you.
because I just think about like how angry I am. I'm like, I couldn't imagine feeling this way for
Oh,
40
well, I mean, and,
years.
and by the way, I mean, I got the shit kicked out. I mean, I talk about that in the book. I mean, 2015 was a pretty dark year for me. I mean, it was really, I got pushed right to the edge of my limits, and I was like praying, like, Jesus, God, why you put me through this? I mean, this
What
really
is it like to
sucked.
be gaslit like that by
Oh,
everybody
it was
around you?
horrible. And yet, I mean, I fundamentally knew the underlying structure of the whole system, and I knew I was right. And I thought, well, I don't give a shit. I'll go down with the ship if I have to. If I'm wrong, I'm wrong. I die, but I'm not giving up on this principle that sound money is the right answer. And, in 2016, we caught a little bit of a breeze. And, now we got, wind in the sails big time as Bitcoin and gold are crushing, sovereign debt. And so, it came my way. And I think in the next 5 years, I'm about to look brilliant. I'll be Michael Burry or something. I mean, people would go, holy shit, he wrote that book and, he could see this shit coming. But
I mean,
I
it's
mean,
been
and maybe
decades and
at that
decades.
time, the book will pick up and go and we'll sell millions of copies. I mean, I've become good friends with Robert Kiyosaki, who wrote Rich Dad Poor Dad.
Oh, cool. Yeah,
He
yeah.
loves the book. He's been pushing the book. He's trying to help me everywhere he can. And he said to me, he said, Larry, it took me a while for my book to catch on. I was on a trip in Africa, on a safari. And my wife called and said, you got to come home. And he said, why? And she said, Oprah called. he, yeah. And he said, I didn't want to come home because I planned the safari for years. It's been a dream, blah, blah, blah. He said, I got on the next plane. and, and I
That's
came home
awesome.
and I'm sitting in Oprah's green room and I'm thinking to myself, you got to be the best Robert Kiyosaki you could ever be. And he goes out there
Isn't
and he
there
does
so
it.
because I think you in your book you mentioned how like you had found your health and then some spirituality and like I think about like Noah's Ark. I mean, like it's such an interesting example where like everyone else is not doing it and you're the one doing it. I mean, so the metaphors there are super
Yeah, it
fascinating, but
wasn't.
I like
Well, I had friends though. I mean, there were other. I wasn't alone. There was a hardcore sound money community that we all would buck each other up and just say, "God damn it, we're right. Let's just hang on." And but anyway, so Kiyosaki. I mean, the story ends with he said, Oprah. He sold 2 million books in the next two months, and get this. I mean, this is amazing. That book has sold 50 million copies. Think about that.
whoa.
Isn't that amazing? Well, it's been out since the
Yeah.
90s, so it's
Yeah. Yeah.
30
It's
odd
got some
years.
time. Yeah, it's
But
got some
it's
time
it's
behind
the
it.
best-selling finance book in the history of financial books. It's a great book, by the way. I mean, it really
Yeah.
does make you think about, how his rich dad taught him how to buy assets versus
Yeah. Was
working
that
for
Keith
one.
Cunningham, right? Or what? Or no, or
I don't know.
I think oh maybe that was Tony Robbins. Anyways, Keith Cunningham's got a great book about that.
I'm
But
with
I
you. Yeah.
I think it's seeing where the puck is going by first principle understanding that and when you stumbled on Bitcoin, so someone's sitting there and I try to do a decent an okay job in one of my most recent episodes that hasn't been published yet, but like so Bitcoin is like compared to gold. Gold, markets are very manipulated. So maybe like help us just give like a broad overview of like, okay, there's the proof of work. Why is it incorruptible? So like what gives you the confidence? Like what when you think about okay, you got that chapter in the book, which again everybody should go check out, but like what gives you that level of confidence? Like this is sound. Like there are certain features of it that you have called
Yeah.
out in the book.
Well, it's algorithmically driven. It's distributed. It's math. I mean, probably the only risk to it is that the core developers can kind of mess with it and fuck it up. But even that, it would have to be a majority of the miners and modes accepting any fuck up. And I think there's enough people with enough brains to prevent a fuck up from occurring. It really is kind of perfect money. I mean, what they, I think one of the reasons, Ryan, I think a lot of people misunderstand this is that you need to think of this thing not as an investment, but you need to actually think of it as a technological invention or some people call it an invention. Some people say it was always there. We just discovered it. Whichever, doesn't matter. And you need to think about how the world changed once we created what Bitcoin is, which is provable digital scarcity. Now you might think, well, provable digital, who gives a shit? Who gives a shit about provable? Well, and for a lot, because I mean, anything digital, whether it be a file or a Word document or a song,
Copy
whatever, you
paste,
make a
copy
million
paste,
copies.
copy.
Yeah, you make a million copies of anything digital. But here we are, we created something digital, but we created a system to make a limited number of them and therefore make it digitally scarce. And what it turns out that's actually incredibly important as regards money, because money is one thing that even throughout all of history there have been harder forms of money and softer forms of money, but money has always been something that there will be more of over time. So, and gold has become the soundest form of money because, as Say points out, the stock to flow is the lowest. It's the lowest one out there, in terms of comparables. And so, the supply of gold in the world grows at between 1.5 and 1.7% per year, and that's
No matter
that's
how
still,
much technology comes out, right? Because
doesn't
like
matter,
technology,
right?
like in Lynn's book, I think is super important. Because I want to interject here for a second, because I think this is one of the things that like blew my mind apart. So I want to go back to then your technology point, but like when I am explaining, because my daughters get this, Lawrence, because I have twins, and so I'm like the fair cop, and so like I say, like everything is about being fair but not equal, and it's a really interesting like exercise as a personal growth. But it's like, okay, so my daughters understand money printing because I'm like, okay, well, if you work Everly for 5 hours and I give you $25 to work to clean the house and I just give it to Zoe, is that fair? She's like, no. I'm like, I stole your time. And she's like, it's like, so who made me God as Ryan? And so then this whole like, who made me God is like the balancing of the ledger as Lynn Alden talks, but it's just, we're managing the tallies of time. And so then we have to then figure out, well, who is the arbiter of that balance sheet? And what I thought was fascinating in Lynn's book, and you talk a lot about, is, well, gold became the arbiter, because you can't, no matter what kind of technology we had, it was 1.5% supply. So you can't inflate it no matter how much technology you have. And it's just tied to time because it's on the freaking periodic table, right? So then there was this way, like, and then the gold got centralized, because you and I, like, if I wanted to buy your book, I can't like send you a pile of gold right now. Like you have to melt it down and all that shit. And like, so you give it to someone that you trust and then they become the thief.
Right.
And so
Yeah,
now
no,
we got digital ways of not having that happen.
right. So so it's effectively digital gold. And I think a point I would make is that for all the people who love gold, is that in 40 years we'll have twice as much gold out there. So there's inflation in the gold supply. And by the way, if the price goes up a lot, that 1.5 to 1.7 may go up a little bit. There's some people who say, well, if the price of gold goes up, we're going to mine a ton more gold, and there's going to be a lot of
The
look.
meteors,
I
Lawrence,
invest
it's
in
coming
yeah.
from the meteors.
Well, we'll get to that in a minute. The it's so hard to build a gold mine. It takes 10 years. I mean, yes, higher gold prices will mean more gold production. Are we going to move the needle on the 1.5 by very much? No. I mean, maybe we go from 1.5 to 2, but it's not like we're going from 1.5 to 10. You couldn't do it. I mean, first of all, because a lot of big, easy deposits have been found. I mean, we're now scraping the bottom of the barrel to mine gold. I mean, the easiest shit has been mined. And the whole asteroid thing, I mean, I know people talk about that as an existential risk to gold. I mean, slow down a second. How many asteroids have we actually even tracked? Do you know what I mean? How many asteroids have we actually even made contact with? How many asteroids? I mean, the notion that we're going to find, catch up with, track, and get on and mine a metal on an asteroid out in the middle of space. I mean,
All before our balloon payment in 2026, right?
yeah, exactly. I mean, good God, man. I mean, that's so many orders of magnitude away from where we are today in terms of technology that I find it laughable. Do you know what I mean? I
Yeah,
mean, the
it's the same
asteroid's
thing with
going
the
to come blow
quantum
up the gold
computing.
market.
It's
It's
just
like,
like, yeah,
yeah,
it's the,
give me a
yeah.
break. That's not going to happen. But here's the point. Let's go back to the core issue. So Bitcoin comes along. I mean, for thousands of years, literally for all of human history, we have had money that could be created. It could grow. Silver grew, gold grew. In fact, the reason silver got demonetized is because it wasn't as scarce as gold. And over time, the silver standard went away and the gold standard emerged. So
Well, and the benefit
proving
of silver was to actually be more portable. When the moment we went digital, right, we started using it, became less valuable because we
exactly
had.
well, and it was smaller and easier to deal with. I mean, it's hard, a gold coin at $3,000. How are you going to pay for coffee? So silver was good for pocket change, always was, and that's why the Romans based their thing on silver. But there really wasn't enough gold at the time. But the point I'm making is that the hardest money always wins, which is, and by hardest, I mean the one with the lowest amount of dilution in the future. Well, okay, guess what? Bitcoin got invented. How about zero dilution? 21 million, that's it, forever. It's like, oh my God, that's kind of different. And so what they created, or what they found, discovered, created, however you want to call it, when Bitcoin emerged, was they created a form of money with zero dilution. It's perfectly inelastic. What do I mean by that? The SEC has said Bitcoin is a commodity. So think about commodities. What are commodities? Corn, grain, coal, gold, any oil. You push up the price enough, we're going to find more of it. That's just the way it works, right? I mean, if oil were $200 a barrel, we'd be drilling in your backyard. So, right? And so the fact is that commodities respond, supply responds to price. Bitcoin is a commodity that's perfectly inelastic. It does not respond to price. It doesn't matter what the price is. There's no more. There's 21 million. That's it. That's why everyone's blowing it in terms of looking at it as an investment and their investment analysis. And that's why when Saylor says it's going up forever, Laura, he's right. It's not. It's 100,000 today. It's going to 1 million. Then it's going to 10 million. Then it's going to some higher number. Now I won't be alive to see those higher numbers, but I'm sure I'm going to see the million in the next 5 or 6 years.
And it's like, and then I go like, what my brain does, Lawrence, which is why I've been able to get this confident with this, even though I'm still always asking questions, because I don't want to be wrong, right? Like I'm just doing this out of my own journey.
None
And I
of
go,
us
okay,
do. We're
well,
just trying to protect ourselves. Yeah.
right. And that's where I think the why does sound money always win is because I think inherently humans want to be sovereign. We
Yes.
want to do it, and I want to protect my time, and then you not tell me what to do with my money,
Right.
which is then what I do with my time.
You don't want to be stolen from. Yeah.
Right. And then I go, okay, well, we have a lot of people like too many people are getting old that we cannot create more revenue off of. We are going to pay them more. So it's $2 trillion in a deficit right now. And like, we're in this mathematical doom loop right now. I go, okay, like, how would this not happen? And there's like no way out. Nothing stops this train. I go, okay, well, like the
That's
big
the thing.
Brit.
The math is absolutely relentless, and that's why we have this sovereign debt crisis. And the reason, I mean, there are two charts in the book which I really love. The charts of the price of gold in compared to 20-year bonds, and the price of Bitcoin compared to 20-year bonds. And since 2020, gold's up 200%, Bitcoin's up 2,000%. So, what that tells you is that the money that represented by the sovereign bonds, which used to be the base layer of finance, the money is dying. And the book talks about this. I go through a lot of examples. We've seen this before. We've just never seen it with a reserve currency. We saw this in Venezuela. We saw it in Weimar Germany. We saw it in
Or
Zimbabwe.
even the Dutch glider or the
Yeah,
pound. I
right.
mean, it's
There are
been all
50 examples of money failure, in the last 100 years in developed countries around the world, some less developed, but in countries that are notable. And, so they're out there, and those examples exist. And, what you can see is all the steps that took place before the money failed. And then you go back and you look at what we're doing right now. We're doing the exact same shit.
well, and
They
same thing
ran
with
debt they
Rome
couldn't
and all this
afford.
stuff. And
Yeah, they ran up debt that they couldn't repay. They printed money to pay the interest, except, I mean, we're doing all of it. And so it's kind of like, okay, you do the same shit. Why do you expect a different outcome? You're gonna
well,
end up with the
and
same
and the
outcome.
propaganda that people get of like CPI, like it's just it. And I'm hoping, and back to your virality of your book, I hope is like, dude, like daycare is $3,500 for people to have mac and cheese. And like, yeah, I go through my health. I have high deductible health insurance. It's like 20 grand a year, and it's horseshit. And like, I go through and like, this is a freaking joke. Cars at $100,000. I mean, like 85 month, like, and so like, I think people are going, uh, and so that's why I'm hoping, like, as I continue to interject more of this material into my material, it's like, so there's a couple things I want to do to spot check in the like 15, 20 minutes, or is what I'm really, really curious of, like, how you see potentially things unfolding, like with the stable coins, and like, what's these transition period look like? But let's hold that for a second. I wanted to throw a thesis by you because with all of the stuff we talked about, the game being changed, sound money, like where is the actual rate of return coming from? I have been getting more and more confident or validated that, okay, so the name of the game, we'll call it a middle market company. So I'll give you a couple numbers and just kind of walk you through my thinking. If you got questions or if you're like, don't know what I'm talking about, just ask me. So if you have a $1 million normalized EBITDA, so proxy for cash flow company, and they're getting a 5 multiple, so 5 years of cash. By the way, both of those are bullshit because it's not free cash flow. It actually is based on it's that there's a lot of faults in that metric, but like in the middle market, that's what they're using, which is that you tracking me? Like
Yeah,
that's
I follow what you're talking about. Yep.
so as an owner, you're going, okay, well, let's say that $1 million in normalized EBITDA is maybe kicking out 500 grand in free cash flow after working capital, debt, taxes. You go, okay, well, that's not, so you go, okay, well, I'm sick and tired of my goddamn job. Like I need to hire Lawrence at 250, 300 to be my CEO. Well, that will go against my cash flow. So people are stuck in this machine that's also their largest asset, Lawrence. So then you go, okay, well, here's what you do, Lawrence. We build all this forecast and we figure out when you can hire that CEO at 25 grand a month, and it's going to take you 36 months. Then on the other side of this, the whole kind of like rule of thumb is like in 5 years or whatever the timeline would be, is you're going to go from $1 million in normalized EBITDA to 2, a 5 multiple to 6. So you go from a $5 million company to $12 million, debt, taxes, the whole thing. And I literally ran some numbers and I'm like, with purchasing power in the debasement, it's the same fucking number. So like you worked for 5 years doing all of that shit, and then it's the same purchasing power, and then you get the fiat bag of shit, and then you don't know where to put it. So like I am like, and this has been the whole private equity. Everybody in the marketplace, the attorneys, the bankers, the brokers, the investment bankers, the wealth managers, everyone's based on this transaction the boomers selling. And I'm going, this is a false paradigm. I said, what if instead of like Michael Saylor, who was taking this to the, 100th the magnitude, what if we took the company and we say, you know what, instead of reinvesting for all that growth which is being diluted every single year, what if we optimize the cash flow and the operations to have a really good life and we stack Bitcoin? Now, all of a sudden, this pressure gets released off of that fucking hamster wheel. Not to say that someone might not want to sell and then take the fiat and put it into Bitcoin, but like, what do you think about like that paradigm shift of like, get off the private equity? I got to sell this thing in 4 years and do all these things to like
Oh,
change the game.
absolutely, absolutely. I mean, look, you know, it's very rare that you have an asset that appreciates it north of 30%. I mean, right now the ARR on Bitcoin's in the 40-50% range. I mean, even Saylor and others, and I believe concede that that'll come down over time as it gets more widely distributed. But yeah, I mean, look, if you have a business that's throwing off cash, you should be putting all of that cash into Bitcoin. And I think what you'll find is that cash will suddenly grow in value in excess of the growth in your business. I mean, there are very few businesses that can organically generate 20, 30, 40% IRRs. There
That was
aren't.
Michael Saylor's story, right?
Yeah,
Yeah.
there aren't that many. Now, I'm not saying there aren't some. There might be a business where you think, no, if I reinvest this in the business, I can triple this sucker, and my IRR, and that's going to, okay, well then fine, then maybe you should reinvest in the business. But I mean, most businesses, when you have a business generating capital, you have to then make a capital allocation decision. It's the most important decision you make, right? As you know, right? And so, what you got to ask yourself is what's my return if I allocate it here versus what's my return if I allocate it there? And right now in Bitcoin, I'm very comfortable saying it's north of 30% a year. It could be 40 or 50% a year. And unless your business can grow at that rate and grow that much value, why would you allocate more capital over there versus what
So
you've got?
and Lawrence, like what that does, like, and I'll tell you my
You're
personal.
right. Eventually, you'll get off the hamster wheel because you'll have
Wait
this
a
pile of
second.
Bitcoin. I mean, so the way I look at it, I've got this pile of Bitcoin, and I'm thinking, okay, this grows every year at 30 or 40%. All right, well, not far out, and I can live off of 3% of my Bitcoin. So,
It's
so I mean,
the savings
yeah,
math actually works.
people are like, hey, you need to go get Bitcoin. You're like, no, I don't. No, I don't. I'll sell 3%. That'll give me enough money to live on. And by the way, the other 97% is going to go up at 30. So I'm still going to be getting richer every year. You
Yeah,
know what I mean?
right. Well,
It's like,
and Lawrence, what it does is like back to that feeling of like paddling behind the
yeah,
wave and all
no,
this crap. And it was life changing for me. So you know what I
me
ended up
too.
doing?
Uh,
Yeah, like what I ended up doing, it was a year and a half ago. So I was in this professional, I was a partner at I founded a professional services firm that did fractional CFO services. So I was hiring like $250,000 CFOs, putting them in on the board of people's companies, and I'm like, this is like it's taking me so much capital to grow this. And I looked at like what would be the normalized EBITDA to the multiple in like 5 years, split it. I had a couple partners, pay debt and taxes. I'm like, this is effed. Like this is a game I can't win, especially with the debasement. I flipped it and go, well, what if I had a great life and optimized my cash flow and then put it into Bitcoin? And it was like my anxiety went from like 11 out of 10 to 2 or 1.
well,
And
that's
every
the
one
thing.
of my
I mean, yeah.
go ahead.
I mean, I'm not trying to brag, but I mean, but I would just observe that since I've gotten into Bitcoin, since I understand what it is, and since it's behaved the way it's behaved, I've now kind of gotten to the stage where it's like, all right, I won. I mean, I'm kind of done. And, I mean, it's
Go
like
do
to a great,
CrossFit, hang out with your family, right?
yeah, I can do what I enjoy. I mean, I feel like I have an obligation to try and help other people understand this. That's why I wrote the book. That's why I do these podcasts. But I'm 68 years old. I'm trending towards retirement. I don't have as much energy as I had when I was younger. And, I got other shit I want to do. I mean, my wife wants to travel and so on and so forth. So, and that's okay. I mean, it's what's really amazing about Bitcoin, and most people don't understand this. A lot of people miss it. Is that this solves your financial equation, and you can just do it, forget about it, and then go do what you really enjoy with your life. And there's one thing that is scarcer than Bitcoin, and that's your remaining time on Earth. You know,
I
and
say
so
amen.
right,
And
and
like
so that's what real quality of life. I mean, there are lots of forms of richness. I mean, so Hill wrote that really great book about the 5 forms of wealth, and
yep.
I mean, one of them is having control of your time and your emotions, and not having stress, and being able to do what you like, and be able to stay fit and eat well, and travel and have good experience. I mean, there's a lot of wealth in that, in my opinion.
That is
Um,
what really matters. I think everything else
yeah,
is
I mean,
secondary, to
take
be
care,
honest.
raise your kids. I mean, in your case, take care of your family. I mean, work on charities or projects that you're concerned about. I mean, all those things to me make a wealthy life. Not just kind of what your bank balance is, because someday it's all over, and that's just going to either go to somebody else or go to the tax man or whatever it might be. I mean, it's that's just
Well,
money.
and like think so, Lawrence, which is so I'm trying to figure out how much do I lean into exactly what we're just saying, because like so listen to this. I have 16 coaching clients that I work with individually, where like again, get out of the operations into the boardroom, become a capital allocator, and then I'm growing my coaching program outside of that. And then like I want like Alex Ramos's deal is like your marketing and your content will change more lives than the people you work with. And that's kind of my goal. And it sounds like it's probably similar to yours, but
It's a little bit of
I'm
my
trying to
goal
figure.
too.
Yeah, it's like I want to change people. I want to help.
I
And
want to
like,
help.
but
I want
here's
to help people. I mean, I would really. I mean, and this is ego based, I know, but I would. So, I'll tell you a funny thing that got me hooked, caused me to write the book. Somewhere along the line, I was talking to a woman who was a potential editor. It turned out I didn't hire her, didn't use her, but it doesn't matter. But she said something to me that really set the hook really deep. And I said, why should I write? It's gonna be a lot of work. And she said to me, she said, Larry, you do realize that books can change the world, don't you? And I was just like,
that's
oh,
so
fuck.
cool. Hook.
Exactly. She
Yeah,
just set the fucking hook. And I was like,
that's
okay,
awesome.
God damn it. Do you have something, she asked me, do you have something you say that you think the world needs to hear, and it could
Yeah.
maybe in a little way change the world? And I said, yeah, I really do. And then she said, you got to write it. And she was
Well,
right.
and she is, and like what so how I think because you're helping people with the orange pill. It's like the way I think about it is step off that railroad track with the train coming at you. And so how it relates to the owners that I'm talking about. And I really think that you and I should maybe unpack is like the owners of the middle market, they
Yeah.
employ 70% or more of the country. So like the people
Oh,
that I
yeah.
work with that are my audience. So like they're not the Wall Street people. They're not working at
No, I
Amazon.
know.
It's like,
They're the people who
it's
run the country, who make shit work. Well,
Right, and actually make shit for real people doing real things
yeah, they
and
do
like
real
that.
shit that we need to have done. They're not in Washington
Yeah,
shuffling
I
paper
know.
or in New York
Right.
selling paper,
And
right?
so
And,
let's walk
well,
through.
and here's the great thing, Ryan. I mean, if you orange pill one of those guys or gals, and they really understand it and
150
believe it,
employees, 400 employees,
then,
20
then they're going
employees.
to go give this. Then they're going to go give my book to all their employees and say, "Look, you guys got to focus on this, right?"
So
So,
let's unpack this for a second, because I think I like kind of what your editor said to you about the book. Like when I said, because I think that a good life is the highest noble aim over the longest amount of time span, impacting the most amount of people. And I go, well, if I can go change, like with my clients, they have thousands of clients or thousands of employees. I'm like, if they can have good companies, then if they're taken care of, then they can take care of their employees. And like, it's all this recycled. So what is being told to the middle market for the last 15 years because of the unhealthy growth of private equity. Yes, there's a place for private equity, but it's because of the low interest rates. They've been chasing returns. So, Lawrence, what's happening is everyone's being told you need to grow your company, grow your normalized EBITDA, grow the multiples so you can sell to private equity. Then you can be free. But the effed up part about this is like, just like when we started, like what is driving me is independence. I literally want to do whatever I want. Well, what if it was like way closer than you thought? And that whole game that's being talked about, you can just go, no thanks. Cause like what happens, Lawrence, and I did this when we turned around the family business, $350,000 new accounting system, hire 3 new executives, find the recruiters, put in the digital marketing, and you're just burning money on fire trying to get that return, and it's just eating shit. You can get there. It is possible. I'm totally convinced of that. But what if you just didn't have to do that?
well,
And
that's
you
the
just
thing.
shifted over here and said, well,
That's the thing. That's the beauty of it all. That you can actually by opting into this. We're all very very fortunate to be at this time and place in the development of this new system. I mean, we're just about to get on the steep part of the adoption curve. I mean, depending upon who you believe, what do we got? Between 5 and 12% of the people own in the country in the developed world own Bitcoin, and by the time it's over, 90% are going to own it because they realize it's the best money and they got to own it.
how do you see, and knowing that we're getting close to the end here, is before talking about like how you maybe see like the transition period, which I got thoughts on, but like what could an owner of a business do for their employees? Because you got this bullshit 401k and all these captive things, so all the advisors can get rich off all this shit. But like, what are ways that
Well, they
if
can make
they
their
decided to
401
change it?
they can make their 401k self-directed so that their employees can buy Bitcoin ETFs in it. So that would
Yeah,
be one thing they could do,
yeah.
as opposed to forcing them into, whatever the Vanguard wants to sell them, S&P 500. They could, give out my book or work to educate their employees about savings and how important it is and how, they found, I mean, in many cases, I'm sure the owners of these businesses are fairly well to do, and the employees respect them and think that, and they follow their judgment. And if they say, "Hey, look, this is what I'm doing with my money. You should consider doing the same," that would make a difference. I mean, I feel like every person we orange pill, we've kind of saved somebody. I mean, it's almost like Christianity. It's almost like Christianity, but I mean, I don't necessarily always like the religious component comparison, although I do think the world might be divided into pre-Bitcoin and post-Bitcoin, like BC and AD. And I do, and there are times I am spiritual. There are times I honestly do think that Bitcoin is kind of God given in the sense that we're just running down this nihilistic, evil, fiat path, and suddenly, digital code and
Like we have
microprocessors.
the actual option to opt out. Like watching Jeff
Exactly.
Booth,
I mean,
like watching Jeff
the book
Booth and
talks
his
about
like,
this. The book talks about really how the microprocessor really saved us. I mean, it's the I mean, the internet saved us. The fact that you and I are having this conversation 20 years ago, we couldn't do this, right? Yeah, it's wild, and it's a really good thing. And so people should embrace that change and recognize that these things are positive things, not negative things, and that I mean, you can now, you don't need a college degree. You can totally self-educate yourself online with podcasts and become smarter than people who have college degrees. I
I
mean,
have an
it's
entire story about like when I wired my first bank wire from US Bank to Coinbase. They're like, who
yeah,
told you to do this? I'm like, me. I read
yeah.
books and did podcasts. They're like, no, we need to put someone's name. And I was like,
Oh my God,
what?
isn't that funny?
It is so insane. It's like, not
Yeah,
your
right.
bank,
I
not
mean,
your
it's
money. There is no money.
yeah, yeah, right. Well, yeah. So Yeah, I mean, it's a beautiful thing, this change that's taking place, and those who are aware of it and understand it, it's kind of like I feel obligated. It's like, okay, I cracked this code. I mean, some people are like, well, you're shilling Bitcoin. I'm like, no, I'm not. I'm trying to help people.
Yeah.
I'm
It's, yeah.
Bitcoin's not going to respond,
No one owns it.
based on what I do. But I just want, I want people who are honest and hardworking and trying to save and get ahead to understand that there's a technology that'll help them enormously, and this is it. So
How do you see the next, so knowing we have like $9 trillion to refinance, we have the stable coins. Like I see like the stable coins and like this Tether Safe presentation at the Bitcoin conference was very fascinating to me, where it's like, okay, we're just crowdsourcing the last run of debt to the rest of the world.
I think that's right. Yeah.
And that's the
So
big print is kind of what I've like, is that
yeah.
what do you,
So to me, the Besant and Trump, stable coins are going to save us from all the debt because they buy debt. I mean, this is like, Doge is going to cut $2 trillion, which was a fantasy. I mean, stablecoins are net positive. Don't get me wrong. Tether is, it's called 160 billion, Circle 60, so that's 220. But and they buy Treasury bills, so there's 220 billion of demand for Treasury bills. Guess what? We got a $2 trillion deficit, okay, and we got 9 trillion to roll over. So it's not, and the stablecoin volume is growing 50% a year, although most of that's overseas. I mean, I was on a show where I sat with a lot of Russians who basically said, they're the heavy stablecoin users because they got shut out of SWIFT. So so the stable coins are not going to save us, but it's okay. I mean, if the government wants to push the stable coins and the Clarity, the Genius Bill and the Clarity Act, I mean, I think it's all net positive for Bitcoin, the Bitcoin ecostructure. But really, a stable coin is still just, it's denominated in a dollar, and the dollar is going to die. I mean, the thing that I think, and this will be shocking to some of your listeners, but the thing I think people really underestimate is how the dollar's value is going to zero. Okay. Now, I can't say on what time frame. It could take 20 years, but it is going to happen because it's just because of the way the system's constructed. And I think my kids will price things as satoshis, and so so I get it. That's a very unpleasant thought of dollar value going to zero. But what it would if I were a wealthy person, I had everything denominated in dollars. I might say to myself, "Huh, that's interesting. If that guy's right, maybe I need to have something a hedge against
some
that."
hedge? Yeah. Yeah.
Yeah,
Do you think that
I don't
there's
need to
any
take all my
possibility?
money. I don't need to take all my money and put it in Bitcoin, but gee, Bitcoin is the best performing financial asset the last 15 years. Why do I have zero of it? Maybe I should
Yeah,
have
no,
something,
it's,
right?
I
And
mean,
so, but to your question, because I know we are running out of time, to your question of how's this all going to unfold, it's very tough to know. It's really tough to know. It's sadly, I think it's going to be kind of messy, and I think some people are going to get hurt. I think we're going to, well, big picture. There is anyone who thinks inflation's under control, going to go back down, or going to get sold, they're wrong. Inflation is going to get much worse, which is really sad. Eventually, I think what will happen is it'll get so bad, there'll be such a large outcry that, and I don't know if you saw Robert Kennedy's speech at the Nashville Bitcoin conference, a very good speech, by the way. I recommend everyone listen to it. We are going to demand that the politicians fix the money. We're going to demand that we reset the
I
system. In
hope
fact,
that's the case because, like, if you read Ray Dalio, it's either a fascist or a communist that gets elected,
that's
and then
right.
like
That's the alternative. And look, chapter, I don't know if it's 21 or 22 in my book talks about, I mean, I actually have a policy prescription in there for what they should do. Now, I don't
your
think it's,
presidential address
yeah,
was freaking awesome, dude.
right.
I
Yeah. If I
love,
were
I
president, this
love
is
it.
what I would say. Now, but be honest, Ryan. I mean, the odds of somebody doing that right now are like zero, right? I mean, there's just not enough pain. It'd be politically,
Do you think
so
like so like and maybe I'm totally batshit crazy here, Larry? Is
yeah.
that is there because like after reading the history of money and banking in the U.S. or the U.S. history of money and banking by Rothbard, I was like, this has been the biggest sham for 400 years. It's been the fight for the money supply
Oh
forever.
yeah. Yeah.
Is
No, this
there
is
a
not new.
is
This is
there
not
is
new.
this a is there like a 1% chance that like the world leaders, as we're doing this like trade war bullshit, are maybe renegotiating our money situation on Bitcoin? Is there a
Yeah.
small
Oh yeah.
chance of that?
I think it's higher than 1%. I mean, Stephen Moran, who is now going to the Fed, and he used to be the Council of Economic Advisors. I mean, he's pro Bitcoin. I mean, Besant gets it. I mean, he's a gold bug. He says that. He's also, I think he's supportive of Bitcoin. I mean, the national defense people, I know this from a variety of sources. They understand that money is a real risk for the United States, and I mean, Trump has said things like, he who has the gold makes the rules. I mean, Besant said he wants to be president at the next Bretton Woods, which is the last large monetary conference. I mean, Mirren's paper was, called the Mar-a-Lago Accord. I mean, kind of a restructuring of the financial system. So yes, this is all in their sphere and on their radar, and they are thinking about it, and they're trying to move the chess pieces around. And they might, and don't get me wrong, there might be some of them who know exactly what we should do, which is go to a full Bitcoin standard immediately. But
Well, how would that be so chaotic for like
well,
how bad the
exactly. That's the point. So, so the politics of it are that, like so many things, this is going to be, a several decade like process. But what if you read the tea leaves and you listen to what they're saying and you watch all the moves by the key people in the Trump administration, Eric Trump being a huge Bitcoin bull, saying their family has an enormous amount of it. I mean, you realize that we are strongly headed in that direction. And whether it's a couple of years or a decade or maybe 2 decades, that's where we're going. So it's Gretzky, right? You want to go where the puck's going. So it's a very, very good time in my view to own this shit. you know, and I think at the reset, I think people are going to be shocked. Let's just zoom out 10 years, 20 years from now. I think you're going to know who owned Bitcoin and who didn't. It's going to be like, oh my God, that guy is fucking silly rich. How'd that happen? Well, he owned a lot of Bitcoin. I mean, it's already kind of true. I mean, look at Max Kaiser. The guy's a billionaire. I mean, the guy was he was a stockbroker and a podcaster, but he was buying at $2 a coin. He's a billionaire, multi-billionaire. I mean, it's there's going to be more of that, and the history shows that if you hold the wrong money, the money that's depreciating, you end up bankrupt. I mean, if you held Reichsmarks in Germany in 1921, you became poor. It just they went to zero and you became poor. If you were Hugo Stinnes and you owned property and businesses, they reset the currency, they backed it with gold, and then suddenly all your things became worth something new. It had value in the new currency. So that's kind of that's what's going to happen, and I think it's going to be shocking. And so I'm kind of
See,
here.
like, well, how does your
I don't want to be. I don't
tell
want to
you?
be I don't want to be an extremist, but I want to say, don't mess around with this stuff. I mean,
It's
you
not
know,
worth messing around. Like, even if, like,
yeah. I
back
mean,
to, like, even if you don't want to be wrong, like 5% for crying out loud.
right.
Like,
I mean, exactly. I mean, I'm pounding the table. Get some of this, because otherwise you could experience severe regret if I'm right. I mean, severe. And I'm not telling you got to go put 100% of your money in Bitcoin. I wouldn't recommend it to anybody. But I'm saying, you got zero Bitcoin, huh? No, no, no. What are you thinking?
yeah,
Right?
exactly. Like, huh? I
Yeah.
just don't get it. Like,
Yeah.
just a little bit. And um, does it? There was a recent interview I watched with Jeff Booth where, like, because I feel similar. Like, when the reason I've gravitated to a lot of the material that you put out and why I watch a lot of your episodes is because I feel the same, like, burning passion, and it actually, like, it's like uncontrollable sometimes, and I have to figure out like how to like rein it in. And I watch Jeff and I go, there's something that I learned from watching one of his most recent ones, and I was just like, he's really relaxed. I'm not usually relaxed. I'm very energetic, and I'm like, what if, like, because I feel so stressed out about like orange pilling everybody because I love so many people and I want to help people similar to you. And I go, well, if the whole transition were to happen right now, it would be very painful. And maybe this is just the way it's supposed to go. And I can actually give myself a breath of fresh air and just take some time with
Absolutely.
it. I don't know how
Yeah.
you process that, but
Yeah. Well, Jeff's great. Jeff's a friend, and he's got kind of a Zen view of it. Yeah. I mean, there are arguments for going faster. I mean, the faster argument is it's a broken system. The others. I mean, first things first. Let's. I think we would all agree, or those of us who understand it well would agree, that on the other side, when we're on sound money, things will be much fairer and better, and it's going to be a much better world. So when we fully get there, things are going to be great. Okay. So then the question becomes, how fast do we want to go from where we are to getting there? What's the right balance of pain and this? I mean, it takes too long. I mean, and remembering that a lot of people are suffering right now under the existing system. So it'd be better to Even if you have to suffer a little bit more, maybe faster is better. So,
well, and how many people would actually like? How many people would it actually be worse for? Is kind of the better
well, there'd
question,
be,
like, right?
yeah, there certainly would be some. I mean, you know, when you kind of consider, the working man, the blue collar person, or just the white, the average person, they don't necessarily have a lot of assets, and especially if unless they're old, it's gonna. That's the other thing. It's going to be generationally different, right? If you're 60 plus and the money becomes worthless, and you have a pension or you have Social Security payments, well, you're screwed because you can't really work that much anymore, and what you thought you had, you don't really have
Well, and
anymore.
this is where, like, couldn't the government like put back, like, almost like what like Sailor is doing or Tether is doing? It's like there's a way to figure that out because, like, Lawrence, I went down the rabbit hole. It's like you have 4% of the country that makes 200 grand as a household income and more.
Yeah.
You're like everyone, like, in like no, like
Well,
I'm in it too. It's like that doesn't get you shit, and you go, okay,
oh, I
well,
know it's hard. Well,
and
that's
you,
what I was
I don't.
what I was going to say though is so let's take your plumber, just your
Mhm.
and I know some plumbers do better than this, but
They're
let's
not
take your
making 200 grand because no one wants to
yeah, but
plumb.
let's take your 25 or 30-year-old plumber, right? And the money becomes worthless. But guess what? People still need plumbing services, and
Mhm.
once the money becomes worthless, there's a new form of money that emerges, and then suddenly you
Time.
have yeah,
Well, the
and
time your
so
utility, right?
right, and so he just reprices his services in the new money, and he now lives in a fairer system where he can save and grow capital. So
Interesting. Yeah. Yeah.
what it hurts is it hurts the people. It'll hurt the rich a lot because especially if they've got bonds, it hurts the people who have fiat denominated assets. But frankly, they've done pretty well for a long time. I think it's interesting the Trump administration said, look, Wall Street's done great for a bunch of years. It's time for Main Street to do better. And I completely agree. I mean, that's the fundamental problem is the wealth inequality that fiat creates because it gives all these people at the top an enormous
Well,
advantage.
it's so crazy, Lawrence. I was in North Carolina in Wrightsville Beach, and I have these pictures where, like, I'm like, okay, all these houses, they're all $2.5 to $5 million, all of them, so many of them. And I looked, it was 780 grand in 2019. And I was talking to my wife. I'm like, they're not buying this shit with cash. They're taking margin loans against their commercial real estate or their bond portfolio, whatever it is, and they're buying this shit. No one has that kind of cash, or not this many people. I mean, it's just like it's all this
Yeah, well, that's when you
margin
have a
loans on margin loans on
yeah when
margin
you have a
loans.
credit fueled boom, that's what you get. You get inflation and everything. And sometimes it's in assets, sometimes it's in grocery prices, but it's all inflation. And it's look, the bottom line, I mean, the thing I would say to your listeners, I think is the most important thing to fully understand is that the government system we have is broken, and it literally requires them to print money to keep it going. And by the way, that printing is kind of an accelerated rate. One part of the book I talk about how alcoholics, they solve a hangover by drinking more. You know what I mean? And that the government's an alcohol, the government's a dead alcoholic, and so um, you know, therefore, how do you fight back? You want to fight that system? Fine. You save in things that the government can't print. Real estate's one, but they can tax that and you can't move it. So it's not a good one in my view. So the two things they definitely can't print are Bitcoin and gold. So you've got to, I mean, I tell everybody you've got to save in Bitcoin and gold a lot. I mean, that's, and then there's stocks as well. And that's a whole different,
Yeah, it's a whole
question.
different can of worms. And like, but I think, if there's, as we wrap up, and thank you so much for the time, is I think people have the opportunity to step off the treadmill,
Yes,
get the wave where you make your time and your value, the worth it. You can be sovereign and independent. I mean,
that's the important
you're proving with your book that this is possible now.
That's the important thing. There's a better life waiting for everybody once they adopt this and understand what it is. Everybody I know who's become a Bitcoiner, just they experience a sense of peace once they fully get down the road. I mean, at first they're nervous, like, oh, why am I doing this? Maybe I'm wrong. They got the doubts and they get people, their family and friends take shots at them. Once you really get into it deeply and you fully understand it, you're just like, this is great. I I'm
Life is
good.
not as stressful anymore.
No, I'm good. I know I'm going to be good. Yeah, it's a shit show out there. Yeah, the government's bad. Yeah, they're spending a ton of money. Boy, they're doing stupid shit left and right, but doesn't affect me. In
Well,
fact,
even
the
like
more
this
that
whole Fed shit, even like
yeah,
with
in fact,
Jay
the more
Powell
that
and
stupid shit, yeah, the more that stupid shit they do, the richer I get. So
Oh,
I'm not
what
rooting
a,
for them to
what
do stupid shit, but I mean, when I do it, I just kind of laugh and go, "Oh yeah, that'll work."
a Lawrence, thank you for the time that
Oh,
you've spent
I do have
today.
to run, but I really
Yeah,
appreciate it.
thank you
But
for your book. I'll put a link
yeah,
to the book in there,
we can
and
come back and do another one.
I would I would love it. And I think we
Yeah,
should talk in more detail about how the business owner community could, I think, be your way, the bridge
yeah.
between
Well,
the eco or the echo chamber that I think a lot of big owners in
that's
compared to the
my
normies.
personal goal. My personal goal is to spread the word and to change the world. An immodest goal, I recognize, but I want to have as much impact as possible. And if there's anybody listening who has a sense of, I don't know, media content, just anything that you think would, accelerate the knowledge of the book. I mean, I don't even have a publisher yet because it's too edgy. But, for example, I'd like to get into the airports. It's not there yet, but you
I
can't be
got
in
some
the airport.
ideas. I got some serious
Yeah.
ideas about this stuff that we should chat about.
Yeah, we should. Yeah.
Lawrence, thank you so
Okay,
much, my
thanks. Yeah,
friend.
good to see
We'll be
you.
talking soon.
Okay, bye-bye.